If you want to see the market forecast first, go to slide 6. Howdy swings. As predicted in yesterday's video, the market turned lower, dropping to SPX 5710, but high expectations for tech stocks helped the market withstand the downside pressure and close at 5720. As expected, the market turned lower, but what was unexpected was how quickly the market moved higher at the beginning and end of the day due to high expectations for tech companies. In particular, it was a surprise to see the market recover all of its overnight losses and surge to SPX 5740 at the open. Will the market close higher tomorrow on the back of semiconductor earnings? Let's take a look at Fullhapce's daily swing market forecast and explore the possibilities. Let's review daily market index movements. All major indices are down except for the Nasdaq. The Nasdaq was unchanged. SPX 5,722.26, minus 0.19% down. Dow Jones 41,914.75, minus 0.70% down. Nasdaq 18,082.21, 0.04% up. Russell 2000, 2,220.5, minus 1.16% down. Let's look into daily sector performance. The technology sector was a big winner. Elsewhere, power producers, telecom, staples, and airlines were among the outperformers. Wednesday's big areas of weakness included autos, healthcare, energy, housing, chemicals, capital goods, consumer discretionary, and banks. Let's take a look at some of the reasons why. The stock market has been down slightly due to concerns about high stock prices and doubts about China's stimulus program. With the recent drop in oil prices, investors do not appear to be worried about conflicts such as Lebanon. Russian President Vladimir Putin continues to make threats about nuclear weapons, but seems less credible as similar warnings over the past 2 years have not led to action. The tech sector helped stabilize the market, with Meta rising as the conference began and Micron Technology also rising ahead of earnings. Here are the things to consider. Stocks are so expensive that they have little cushion to react if economic problems arise. The market seems to be too complacent about serious global issues in the Middle East and Ukraine. A ceasefire in Gaza is unlikely, and tensions between Israel and Hezbollah could escalate. President Putin has recently made threats about nuclear weapons. Reports of Russia's secret drone program in China could worsen relations between China and the United States. China's economic stimulus package announced yesterday is not likely to have much effect. Labor unrest, such as strikes, is on the rise. Recent surveys show that many U.S. companies are postponing large investments due to political uncertainty. Here we present the daily market forecast for swings. Weekly market upside potential remains solid, but volatility has increased amid growing uncertainty. Meanwhile, the daily market has stronger downside potential, and volatility and uncertainty are still at a high. As a result, it is difficult to predict the direction of the market, and tomorrow is expected to be volatile. Despite expectations of strong earnings from tech companies today, the market was stressed to the downside, with the SPX falling to 5710. Investors seem to be starting to think that the market is quite vulnerable to downside stress, and with good reports from tech companies, it seems likely that they are setting themselves up for the possibility of a bull trap, where the market spikes temporarily and then pulls back. While the high level of uncertainty makes it difficult to predict, we are slightly leaning towards the idea that on Thursday, the 26th, the market could first move above SPX 5750 on strong semiconductor sector earnings, but eventually close lower than today as the sell-off continues. Then, if Friday's PCE results are poor, we could see further downside. Let's explore some additional insights. Valuations are still considered high, and there are big financial challenges ahead for Washington next year. Ongoing global tensions make people uneasy. Despite these worries, there are strong positive factors in the U.S. economy. These factors include slowing inflation, steady growth, easier monetary policies, and strong corporate performance, all of which support rising stock prices. Let's look at the counterarguments. The opposite scenario is that the market will rally and break above SPX 5800 thanks to good reports from tech companies. The additional rationale for this scenario is as follows. Inflation is declining globally, which is benefiting stock markets. Stocks linked to China may be supported for the time being due to the effectiveness of China's stimulus program. Oil prices fell on news that Libya may increase oil production despite rising tensions in Lebanon. In the U.S., August new home sales beat expectations, and July sales were revised upward. Many homeowners are refinancing their mortgages due to low interest rates, which is giving them some spending room. All things considered, I think the contrarian scenario is more likely to be realized. Traders who are sympathetic to the contrarian scenario can stay bullish, but see it as an opportunity to sell some at the highs. The conclusion is as follows. We believe that the weekly market has stopped rising and the daily market has entered a downtrend. Tomorrow, the market could move lower in a big choppy move, and the market may not make any significant gains until we see the PCE first thing Friday morning. For traders who agree with our forecast, it may be prudent to remain bullish, but cash out partial profits or add hedges once the SPX reaches around 5750 and wait for the market to bottom. Also, traders may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.